All right, so today in this video, we're going to talk about where I believe the stock market is headed and where the crypto market is headed based off of what the Fed is doing. And I'll just compare what happened back in 2018 to what's going on now and the similarities that we have between Fed policies. So today, Brother Jay Powell, he testified in front of Congress at his renomination hearing, right? So a couple things that he said worth noting were that they believe inflationary pressure is going to persist well into the second half of this year, that supply chain bottlenecks are not easing up, and that they will begin balance sheet runoff at some point this year. Balance sheet runoff, we'll start back from the beginning and do a quick recap again. When you buy bonds, you are increasing the price of bonds because you're pushing the demand higher, which means you are decreasing yields. So when yields are low and you're buying bonds, you're pumping liquidity into markets. That's how assets start to go up in value, right? So you got high liquidity. The opposite of that is a balance sheet runoff or unwinding. That's when you start pulling money, liquidity out of markets. That's when you stop buying those bonds, right? So this is from 2018. And how that affects markets is high valuation assets typically do not tend to do well when that happens. And I'll show you what happened to the stock market and to Bitcoin back when this was happening back in 2018. So back then, just a quick summary of it was that they were letting treasury securities run off at about 6 billion a month and letting mortgage-backed securities run off at about 4 billion a month. The maximum was going to be 30 billion a month in treasuries and 20 billion a month in mortgage-backed securities, where they were planning to increase it every 3 months, right? So JP Morgan the other day said that they expect the Fed to announce that they're going to do a maximum of 100 billion, right? So that's double this. So the 30 plus 20 is 50. So that's going to be double this. So we're going to be unwinding at twice the pace. So real quick, we'll just talk about the repo markets. The repo markets play a key role in facilitating the flow of cash and securities around the financial system. However, excessive use of repos can facilitate the buildup of leverage and encourage reliance on short-term funding, right? So this was overnight repos back in, I got the date set to December 1st of 2017 to January 1st of 2019. So we can see that 2018 time frame. So you see it was a decrease, right? So let's just watch the trends. You see the interest rates started to rise. They ain't at nothing crazy. They less than 2 for the most part, but they rising. You see that total assets, the balance sheet, is running off. And remember, we starting December 2017 through January of 2019. So we looking at that. You can see it's running off. So we go to crypto here, but look at Bitcoin. And I go back to that same time frame. And people will have a lot of reasons as to why crypto crashed back then. There was one reason and one reason only. It was because of the Fed. The Fed controls mostly all of all markets. Like I said, this is December of 2017. Remember, December of 2017, we start balance sheet runoff. We look at how far crypto fell. December of 2017, all the way to, look at this, we'll just put it at November of 2018. That's over an 80% decline. We go to the middle of December, that's 85%, right? That's a massive sell-off. Look at that time frame. December of 2017 to December of 2018. December 2017, December 2018. We look at what we got right now. This was You can't even, you can hardly see it. You can hardly see it once you zoomed out, because once COVID hit, this is why everything shot up. Now the Fed has to fix this. This is why I keep saying I'm not quite buying crypto yet until I see where the crypto market is once we actually start raising rates and the balance sheet runoff has begun. We all know the market can do well, the stock market can do well while rates are rising. Because let's look at SPY. Remember, SPY is the S&P 500. This is the largest 500 companies in America, the top 500 companies in America, whatever, right? So we talking December of 2017, markets start to rise. Interest rates rising, markets rising, right? But it ain't last too long. Once you get to December 2018 and stuff start, now you've been rising for a minute. Now you still rising and you still got a balance sheet runoff going. Look what happened to the markets. September of 2018 to the beginning of the new year in 2019. That's a 20% sell-off. So now remember I said certain stuff does well in a rising rate environment. If you look at the banks, even the banks sold off. Nothing did good back then. You had a massive sell-off. So it's not like you could just run to the banks and do well. So if you're talking about arguably one of the best places to run to in a rising rate environment, that can't survive. There's no way I can look at Bitcoin right now and say this is a buy for me. And to make it worse, it has a head and shoulders pattern forming. Everybody's calling 40,000 that crucial. I mean, it is a crucial support level, because if it breaks that, and we've all known that if it breaks 40,000, I don't even think it's stopping at 30,000 or 29,000. It could go far below that, right? So I will definitely be interested in buying if we get. I mean, I'm interested in buying here, but like I said, I just have to be smart and wait. I wouldn't mind continuing my dollar cost averaging, where I just buy a certain amount each week, each month, or whatever. But at this point, I don't quite really see any reason to, just with how uh, the Fed policies are turning. And again, high valuation assets don't tend to perform well, because look what happened back in 2021, and we weren't even talking about. I mean, I guess we had just started talking about tapering. So this is down what, like 30-some% or something like that. So, well, 50%. So this is a high valuation class right here. I don't expect it to do no type of turning around. I made such a rookie FOMO mistake of trying to swing puts on Docusign once we broke this support level. It would have been a really good scalp, but of course, it didn't turn out to be such a good swing entry. Because I mean, I should have been shorting up here, of course, but like I said, I was already shorting ARK. I wasn't really paying much attention to Docusign. But I mean, I see this going back to 100 and then possibly 60. I mean, because think about it. We're getting close to the, what is it, endemic or whatever they're calling it, where we're not worried about COVID no more. So, I mean, yeah, I believe Docusign, like, it's a good idea, you know what I'm saying? Like signing stuff virtually and all that stuff. But look at where it was before the pandemic. It was in the 60s and the 70s. There's no way, it should hold up, or you can try to justify these prices, especially with the way this chart looking. So I mean, you get some long-term puts, you probably be fine. And I'll just real quick say that yesterday, like I talked about with QQQ, it's bouncing. It's bouncing. But like I said, this trend line bounce was a lot weaker than the rest of these. It almost flushed. We look at Going back from October of 2020, you got 1, 2, 3, 4, 4 strong bounces. No, it was no hesitation. You get down here yesterday, you starting to flush. Luckily, you got saved by the anchor VWAP right here coming from May, right? And I think that might have been a 150-day moving average too. But I don't see QQQ holding up. I don't see it making it too far past here, really. We'll see what happens with CPI tomorrow. 386 was my critical point. So, I mean, we're right here right now. I didn't expect it to happen in one day, but that's the market for you. And Nucor was something that I had talked about to my Discord. I think I did talk about it on YouTube yesterday. So we had the Williams percent R was oversold. I mean, it still is. We had a nice trend line bounce, 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 bounce. Quick, decisive, right? So tomorrow, if we get a quick little small gap up and a nice move higher and a close higher, we'll be looking at the abandoned hanging baby setup. And I will make another video to explain that, just to inform you guys about some more patterns that we typically trade. And you can see how it's acting here at this anchor VWAP from those August highs and July lows. And if you look at this, I know it's looking crazy. The purple line is the 150-day moving average, right? So you see, I mean, it came here and kissed it. You see, each time it got up in here, that's when it wanted to start bouncing. See how it's been holding that 150-day moving average, right? So you got a trend line bounce, 150-day moving average bounce, and you're right near those anchored VWAPs. We reclaim those, push higher tomorrow. We setting ourselves up for a push to at least 124, 125. And me personally, I think we will break out at some point this year. We got earnings coming up on the 27th in the pre-market, I believe. And I mean, I don't see any reason why a company like Nucor doesn't break out this year with this raising rates environment, inflationary pressures persisting, COVID going away being less of a problem. They have pricing power. We got a strong economy. So that's pretty much where I think the market is headed. I think we still see some more rotation, a lot of volatile days. And I would just say keep the banks on your watch list for a potential breakout. Oh, Morgan Stanley specifically, because if that can break and hold 106, I mean, I think this thing got a lot of room to run. I think I'm more interested in buying shares right now, just because, like I said the other day, I don't know. I think I'm a bad breakout trader, and I talked about it to my Discord today. I just get like impatient, I guess. I don't know what I'd be doing, but like UNP, that was a horrible breakout trade, and I thought the coast was clear right here. It was a good scalp, but it was not a good swing entry, and that's the crazy thing, is that I keep taking swing entries for stuff that's really just scalps, but I mean, it's like I want to say you don't really know it until after the fact, but you do know it very much so in the moment, just based off how price action is. Because once UNP started to pull back later in the day, see, we'll go back to that day. It broke out. This would have been a great scalp. You break out, you break resistance, you come back and retest, and then pop higher. That's a great scalp. You could have scalped it here, took profit, came back and scalped it again. I probably would have set a stop. We break here, I would have just set a stop loss or something, trailing stop loss, whatever. Take profit and be done. Come Monday, see, this was Friday. Come Monday, you just open up below that level, that 254.7 level, which you should have held and immediately should have exited that. But honestly, I wasn't even looking at the market at this time. So by the time I looked, it was already like down here, and I'm like, well, what just happened? So but going back to the very beginning, it was a horrible breakout trade, and I should have waited for this close and then waited to play it the next day for this to pop higher above that 256 point. one level. So that's how we'll play it with Morgan Stanley. We'll see where it closes tomorrow if it is breaking out. But with earnings coming up, like I said, I just can't see myself buying contracts unless I get some leaps and probably go like 105 strike or 100 strike or something like that. Uh, Honestly, I'd probably be better off just buying some shares, but we'll see. So that's pretty much what I'm looking at right now. Same stuff really over and over. We'll just see what the price action do. I think value wins. Um, we'll see how SPY can hold up, but I don't know if it's SPY is like 30 something percent or like 25% big tech. So people saying big tech is gonna hold up, but I mean I just don't know that. I mean the whole market dumped back in 2018. So what was the excuse back then? So people try to say it's different and all that stuff this time, but I mean I guess we'll just have to wait and see. I think you just have to be cautious and understand the risk. And we just look at Tilray because I did talk about that yesterday. Um, it's holding up. We got a bullish engulfing here, so I like that setup. And I might add some more shares tomorrow. I might just chill and relax. And oil breaking out. I think we just reported a drawdown of like 1 million or something like that. I think it was API, and then EIA is tomorrow. And XLE has been outperforming that. See that thing broke out. I took profit right up in here on some leaps that I had got right here when we had a big Omicron scare. Same thing with XOP. I got in right here and took profit right here. I want to say once we seen this, I actually was about to re-enter, but for whatever reason I didn't, because you can kind of tell. I mean, oil was pumping by that point. We all knew COVID was coming less of a problem, but that's kind of stuff you got to think about as a trader. I can go on and on, but appreciate you watching. You can join our Discord at investorsanonymous.net. I would say just stay informed. Comment below you got any questions. Subscribe to the YouTube. Make sure you like this video, all that good stuff. And I'll holler at y'all in the next video.